Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, viewing the technical assessment for the Australian dollar, as we can see for the last 4 consecutive days, the market is slowly backing away from that 70-cent handle. Still, as it fluctuates in and out of buying and selling in terms of the market's demand and supply, is that the market has actually broken down slightly when you're looking at the RSI along with the MACD. However, we still need to see a break of 69.15 to generate the next move, which would likely see a fall towards 68 cents and reassess from there. With no trend in place to support any bullish case, I do anticipate any further rises up towards that 70-cent handle to fail. Looking at the euro dollar, you can see the market has still potentially stabbing at the level of 113.40.50 as we see a brief look at 113.70. From a technical aspect, it should be noted that one takeaway from the RSI and the MACD is there is a bit of a bullish case coming through. And keeping an eye on this ADX. If we do see a close above the level around 113.50.70, then that could generate a move up to 114. But one particular case is that the dollar index, which measures the greenback strength against a basket of 6 major currencies, hasn't taken out the level of 96 figure, which gives some hope that the top side will eventually fail and see a pullback towards the bottom side of the range around 111 to 112. If you are playing from the shorter side of this market, I do recommend in terms of adjusting your stop loss and take profit accordingly to your risk management in the unlikely event that we may see a pop to the upside to 114.5. Still, however, we need confirmation of this, and that is the dollar index needs to see a close under 96 figure from a New York close basis. The dollar yen has pretty much traded sideways. However, from a technical point, still holds to the potential move of 106 and reassess from there. The pound posted a bearish outside range day overnight, and from the outside range day, it does give some hope that the market has hit a top. Now, from the free rejections of 126.65, we can see this bearish outside range day, which is a negative candle, but need confirmation. That confirmation would be from a break of 125.25. This would reinstate the downside to the lows of 124, with the RSI breaking down also has now come to an end of this divergence that we saw not so long ago. Let's see if the market can confirm this target to the downside, and a break of 125.25 should be the trigger. With all slipping, and there's a couple of candles here that are coming through, especially with this hammer, the fact is that the dollar CAD has potential to move back up towards 136.45 to about 136.80. Purely for the fact is that the 4 bullish candles, the RSI over the midway point, and the MACD bullish does give that view of a potential rise. I still see gold a little bit on the wobbly side as it takes on the challenge of 1,800, and actually it's slightly slipping under there as we talk. There is, from a technical point, further weakness coming in, and the ADX is not trending anymore. I am a little bit on the concern that we could see a bit of a clean out to this long position that's been holding for some time, and if so, could see a flush out to around 1,760 before the rally back. As I mentioned, oil did slip and is looking a little bit heavy, and therefore the call, as it still remains capped from 41 to 41.5 to a potential target of $36 a barrel, and reassess from there. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to this new day.